the best of Money Matters.
Market View on Money FM 89.3.
That's right, you're tuning in to Money FM 89.3. Time now for Market View with me, Chua Tian Tian, where we take you through how the Singapore stock market closed for the day, the biggest movers, sectors, and of course the companies to watch. But as always, a quick recap of some key movements. Well, Singapore shares moved higher today, even as regional investors remained downbeat given US tariff concerns. So the Straits Times Index was up 1.18% at 3,764 points at about 2:10 p.m. Singapore time, with a value turnover of 647 million Sing dollars in the broader market. Now let's take you through the closing numbers. As we shared with you earlier, the STI closed in the green as well, up 1.05% at 3,759 points. In terms of value turnover, we're looking at 1.01 billion Sing dollars. Gainers outnumbered losers, 263 versus 151. Now off to the advances for the day, we've got here GMH USD, DBS and UOB, and top decliners we've got for you ASUS, ST Engineering and 17 Life Group. Now, in terms of companies to watch, we have City Developments Ltd, CDL, because the developer responded to a wide range of questions from shareholders, spanning its share price decline to queries from the Securities Investors Association Singapore, or SIAS. Now, elsewhere, from movements in the US dollar after US President Donald Trump contemplated whether he could fire Federal Reserve Chair Jerome Powell, to more on the key economic data points to watch for the week. We've got more international headlines in focus. And joining me on the line today is David Kuo, co-founder, The Smart Investor. Mr. Kuo, how are you?
I'm very good. How are you, Tian Tian? You've been on your travels.
Yes, I've been traveling for the past 2 weeks. And Mr. Kuo, going to the U.S. this time around, the U.S. dollar's slight gathered momentum after U.S. President Donald Trump contemplated whether he is able to fire Fed Chair Jerome Powell. Now, two short but loaded questions from me over here. What is going on exactly? And what does the ongoing conversation on Powell mean for global equities and global currencies?
Okay, well, Donald Trump generally wants total control of the U.S. government. He wants total control over the different branches of the U.S. government. So he has control over the executive branch. That's him and his cabinet. He has control of the Congress. He has control over the Senate. He almost has control over the judiciary as well, the Supreme Court. The one thing he doesn't have control over is the Federal Reserve, because that is independent. But he wants control of that. So he wants to put his own man in there so that he can whisper to the chairman, the next chairman, if there is going to be one, I want interest rates to come down, and the chairman will probably cut interest rates. So he wants total control over that. Your second part of the question is, what is that going to do to monetary policy in the U.S.? Well, as it stands at the moment, monetary policy is dictated by the Monetary Policy Committee, and they will weigh everything, and they are saying at the moment that it is too difficult to call. On the one hand, you have recessionary risks. You also have possibly higher unemployment as a result of what is going on, and you also have inflation. So what they're generally saying is, let's just wait and see before we actually decide what we do with interest rates. Now, the Federal Reserve is unusual in the sense that it has this dual mandate. So it not only has to control inflation, but also employment levels. And if it thinks that unemployment is going to rise, it should cut interest rates. But at the same time, if it thinks that the tariffs are going to be inflationary, that has to raise interest rates. And it doesn't want to make the wrong decision, and so it's just sitting on its hands right now and saying that until we get more data, we can't decide. That's it.
What about global equities, U.S. equities, global currencies, and the USD? Because it seems like investors are not taking a wait-and-see approach. There are some movements, a drop in confidence in U.S. assets, if you will. How would you read into that?
Well, if Donald Trump does get his way and he manages to remove Jerome Powell, J. Powell, and he puts his own man in place, and if there is inflation in the U.S., and the president says to the Fed chair, I want interest rates to be cut, then what are you going to get? You're going to get a mess. You're going to get inflationary pressures in the U.S., and at the same time, the Federal Reserve under the new chair, if there is going to be one, is not going to be that keen to raise interest rates in order to tamp down on inflation And then why would you want to put your money in the U.S.? You might as well put your money somewhere else. For instance, you might want to put your money in Singapore, Tian Tian, where, if you have a look at the stock market today, it has been relatively resilient. And I think that is generally what people are saying. Why do I need to put my money in America if there is going to be all this uncertainty?
And speaking of Singapore, if we look at stock markets today, the STI up 1.05%.
It was, yes.
Fairly good. So how would you assess the STI's performance today, and any surprises when it comes down to some of the companies to watch, including CDL, which we talked about just earlier?
Okay, generally I would say that the Singapore market was driven by the three banks. So if you have shares in either OCBC, DBS or UOB, you would be reasonably happy. And maybe, that is a sign that some of the money is actually coming into Singapore. And if the money is coming into one of those three banks, and we know they have this wealth management service as well, it means that even though interest rates may be on the way down here in Singapore, the banks still have that other lever in which they can make money, which is through fees management. And if there is a lot, I can't imagine all the money in America coming into Singapore, because they'll probably sink the entire island if all that money did come in. But I think, there is trickles of money probably coming into Singapore, and that will benefit the three banks, which is what is driving the market. But your other question about CDL.
CDL actually responded to a wide range of questions from SIAS and also its shareholders. Any thoughts on that?
What CDL actually said was that the share price decline was primarily caused by factors that were out of its control. In other words, it was saying that interest rates were higher than expected for longer, and we know generally that if interest rates are high, then property prices can be a little depressed. And so they're saying that was affecting the asset value. But we know what the elephant in the room is, don't we, Tian Tian? Yeah, we all know what it was. And it was corporate governance and what is actually going on as far as the board is concerned. So as far as those issues are concerned, they need to address those issues clearly. And I think people are very concerned about what is going to happen at some later point in time, succession risks, those kind of things. And they just want some clarity. So if they can manage to sort that part out, then I think CDL is a company. And, there's this old saying that you should invest in a company that any idiot can run. I'm not suggesting that either of those people are idiots, right? But what I am saying is that a company should be simple enough for people, anybody, to actually sit on the board, sit as the CEO and run that business. And if they focus on the main things rather than be distracted by other things, and I think there was a lot of distraction going on at CDL, which made it kind of difficult for them to make the kind of decisions they had to make in order to make it a stronger company.
And, Mr. Kuo, speaking of macroeconomy, we do want to take a look at Yangzijiang shipbuilding as well, because shares were up 15% this morning after the U.S. watered down its initial proposal of slapping fees on China-built ships. How do investors react to the news?
Very positively. Yeah. Yangzijiang was one of the biggest gainers today. And I think that was always on the cards, because when you have a look at many of the ships floating around the world at the moment, many of them are China-made ships. And so as far as America was concerned, what are you going to do? Slap over $1 million on each ship coming into America? That would be complete nonsense. So I think they have to backtrack slightly, just as many of the other initiatives that America has put in place. They've had to backtrack on them because they suddenly realized that, well, it just doesn't work, because if you're going to put that kind of tariffs on ships, how are goods ever going to be able to enter America in order to pick up goods to export somewhere else, or for other countries to actually put their goods onto ships to enter America? That is just such a nonsensical thing to do, especially when there are so many Chinese-made ships, Tian Tian.
Okay, Mr. Kuo, lots going on, and let's unpack them one by one, because out of China today accused Washington of abusing tariffs and warned countries against striking a broader economic deal with the U.S. at its expense. Now, a lot of things going on and a lot of details to unpack within, but how would you read into the latest comments and any broader implications for Chinese equities today?
Well, I think this is getting quite desperate now, and I think the two largest economies in the world are becoming very desperate as far as what they are doing. Just as, when America slaps on 145% tariff on China-made goods, and then China slaps on 125% on American-made goods, and, there are now threats that some of the rare earths are not going to be exported from China to America. When you look at what is going on, it is getting desperate. And what is happening now is even a case of greater desperation, where China is threatening countries who try and do deals with America, and they're saying that if you do things, if you do cut deals with America that will disadvantage China, then we will reciprocate in some way. And the last thing we want is for this trade war to escalate any further. It's already bad enough, Tian Tian. I mean, how far do they need to go before they come to their senses? I think both sides have just simply lost their minds at the moment. They need to stop this, because otherwise the whole world is going to go down the plug hole.
Speaking of which, Mr. Kuo, let's talk about parcels, because DHL said it will temporarily suspend the shipping of parcels worth more than $800 from businesses to individuals in the U.S. as at today. And that is, of course, over delays in U.S. customs clearances. Any initial thoughts? How much of a disruption do you expect to the global e-commerce industry, for instance, impact on players like JD.com?
Huge. One word, huge. Because, I mean, a lot of the companies in the U.S., and I'm not talking about businesses, I'm talking about households, have been trying to import goods from China ahead of the tariff increases on China-made goods. And that is causing a bottleneck in border control, at customs control over in the U.S. And that is bound to happen. So there's this backlog of goods that need to be cleared. And in the case of DHL, what they're saying is we'll press the pause button at the moment, because otherwise, whatever goods that are coming into the U.S. is just going to be stuck in border control, in customs, waiting for some kind of clearance. And this is a mess. And this, again, was only to be expected. I mean, if you close not close the borders, but if you are threatening to close the borders, you're going to get a rush of goods trying to come into America. So I think DHL is being sensible, and what they're saying is, let's just stop this for now and just let this backlog clear, because otherwise, all the goods, we don't even know what the goods are, Tian Tian. I mean, some of them could actually sort of perish at the borders, in which case people aren't going to be very happy, and then the goods will have to be sent back to wherever they came from.
Now, Mr. Kuo, I've got about 2.5 minutes to go, but I really want to take some time with this question, because looking forward for this week, we've got a slew of new economic forecasts and surveys out, including out of the International Monetary Fund in the first half of the week. We've also got PMI numbers due from Japan to Europe to the US. What are the key indicators to watch for the extent of the initial fallout from the new US tariffs? And what are you expecting on this front? Any guess as to when major economies will bottom out? Crystal ball question.
Yeah, I think some of the data that will come out will give us some kind of clue as to what is going on. But remember, a lot of these PMI data, anything over 50 is good. It means that there is expansion. Anything below 50 is bad, because it means that there is going to be some kind of contraction. But as far as April is concerned, and as we have just mentioned about the goods going into America, I think many of the countries that will be reporting the PMI figures, they won't look that bad, because a lot of people will be front-running a lot of their goods that they require. And so the PMIs won't look that terrible. But I think we won't feel the effects of these tariffs probably for another 60 or maybe 90 days. And then when you have a look at the next set of PMI figures that come out in 3 months' time, I think they will tell a different story altogether. The IMF, on the other hand, always tries to be as moderate as possible. And so I think what they generally will say is that, there will be some kind of slowdown around the world, but it's not going to be terrible. My feeling is it's going to be awful. But they're going to say it's not going to be that bad. What they will also say is that there's going to be some kind of inflationary pressures around the world. But at the same time, what they're saying is that it could be each country experiencing different types of inflation. So I think generally we shouldn't look too much into some of these economic data that is coming out. because many of them will not fully reflect what the tariffs could actually mean for those economies. But if you ask me the same question in 6 months' time, Tian Tian, I think it will tell a different story altogether.
Okay, and before we let you go, Mr. Kuo, the U.S. earnings season kicks off with earnings due from your Alphabet, Intel, and Tesla. How would you prioritize what to watch this week aside from the economic data out?
Well, I would definitely be looking at Alphabet, simply because I want to know what the advertising revenues at Google are going to be and whether or not businesses in America are as bullish as they were before in advertising on the Google website. Tesla will be interesting just to see how bad things really are. And I think there are many analysts out there at the moment that are already slashing their forecast for Tesla. And I think those forecasts will remain in place until such time that Elon Musk decides that he isn't going to be part of Doge. But there is one you left out, Tian Tian, and that's Procter & Gamble. I will definitely be looking at Procter & Gamble very closely because I have an interest in Procter & Gamble.
PepsiCo as well.
Yes, correct.
Your favorite.
But Procter & Gamble will tell me what the American consumers are thinking about, and their forward guidance will be very important. So there you go, Tian Tian. Yeah, a potted look at what's going to happen next week.
Thanks so much for the insights, Mr. Kuo. As always, that was David Kuo, co-founder at The Smart Investor. Thank you so much for joining us.
Thank you.
Before acting on the information on Money FM, please consider if it's suitable for your own investment objectives, financial situation, and risk tolerance.